Morning everyone, and a very warm welcome to Bullzire 25, our annual celebration of finance, strategy, and the dynamic spirit of investing. This event is brought to you by Chandrakala Broking, co-powered by Shriram and Share India, with Golfi as our associate partner. Today, we are truly honored to welcome someone who has built a remarkable career at the intersection of financial expertise and real-world impact.
Mr. Robin Arya is the founder of Golfi, a SEBI-registered investment advisory firm dedicated to making smart and data-driven solutions accessible to all. Before founding Golfi, Mr. Arya served as a vice president at HSBC, leading critical regulatory and strategic initiatives during his nearly 14-year tenure.
Beyond the corporate world, he is the creator of the Rich Budget Show on YouTube, where he simplifies the world of personal finance and empowers thousands of individuals to make better financial decisions. He firmly believes that successful investing isn't about following trends. It's about building conviction, discipline, and trusting the power of data.
Today, he'll be sharing his valuable insights on navigating financial markets, building resilient portfolios, and identifying opportunities in today's rapidly evolving environment. Ladies and gentlemen, please join me in welcoming to the stage Mr. Robin Arya.
Kind words. So how is the Josh? How is the Josh? इतना कम कैसे होगा? How is the Josh? ठीक है, उस जोश को आगे बढ़ाने के लिए you also can scan this or go to Google and type Slido, because there are a lot of goodies I have planned during the session in form of quizzes. So maybe the top 10 of you will end up kind of winning the goodies from Golfi. I am sure this is kind of very far, so you may not be able to scan from that distance. But if you just type Slido on Google, you will have to enter the code 4929256. Again, we'll have the scanner and the code when we actually get into that page. So moving on, I don't have the remote, so maybe somebody has to kind of change the slide. Can I have the slide? Right, wow. So before we move into finance, your career, data, tech, fintech, I think let's talk about something which unites all of us, which is cricket. How many of you remember this picture? Bus? I'm sure we are all fan of, we are a country of where cricket is like we treat it as God. And you see how, this team kind of won over the world. We are world champions. Now tell me, can we be world champions if we form a team which is made up of only Rohit Sharmas, only Virat Kohlis, only Shamis? What you need to make this team, which is a champion team? You need a mix of players, right, which can handle, say, different kind of pitches, tremendous batsmen, opener, they can play the end overs. So you need a mix of players in your team to have a successful winning team. Similarly, I think in your career or maybe in creating a portfolio, you need different companies with different characteristics ultimately to create a team or a portfolio which will outshine and maybe give you the best performance. So we're very proud of our Indian cricket team, and that's where I think we have to get start the session from here. Can I have the next slide, please? Is it visible? Can you read from there? Okay, great. So, we all know that there are a lot of confused faces here. We've done a lot of survey and we realized that if you see some frustrated face in the middle of that young girl, you see very confused faces, very few happy faces. So kind of representation of what you see here. The issue here is 70% of adults, when I say adults, they're all the young adults like you, lack financial knowledge to make informed decisions. I'm sure you are very excited to be, maybe I'm sure there are school students excited to be part of SRCC next year. SRCC students excited to kind of start their investment journey as soon as they start earning the internship. The issue here is that 70% of all of us lack the knowledge to make some right choices or right decisions. And we are growing as a country in terms of kind of financialization of savings and, markets getting more mature, but we have a lack of access of, diverse investment opportunities. So what we will talk today in the next maybe 20, 25 minutes is how do you manage your money smartly, what skills you need in right now in the next 1 or 2 years while you do your internships and your first job to make a winning career. And if you have to start today, do I have something for you where you can actually start today? So I am also planning some small launch of one of the thing which we have made just for you. We'll launch it today. Next. Okay, let's break the ice and see who's in the room. So it says, getting to know you. Again, go to Slido, same code. I think the code is missed here for some reason. And maybe we can quickly, I will just quickly see the code here. I have to use my phone because I have to kind of see the, run the Slido here. It's just a poll. So 4929256 is the code. And once you go there, you might see maybe a blank screen. And now it's active. So it's waiting for votes. So you might have a question coming on your screen. If you receive 10 lakh today, what is the first thing you would do? I am getting votes now. The options, because I think I have the flexibility to switch and show you the live movement of the kind of scoring, but you can see yourself. I have 31 votes so far. Invested smartly, travel the world, buy something big, car, house, gadgets, pay for higher studies, party hard and figure out later. How come nobody is saying party hard and figure out later? That's surprising. Okay, the poll will kind of finish in next 10 seconds. Keep voting. I have 46, 47. Please keep voting. 50 votes now, 51. बहुत smart audience है लग रहा है. Intelligent audience है. मैं नीचे चला जाता हूँ वापस. Okay, so the poll is logged. You can see, I am sure you're able to see the results yourself. 65% of you says we will invest it smartly if you have 10 lakh today. So I believe that you are a very, very smart and financially aware audience. 8% travel the world. I mean, I have 10 lakh today as a buffer money. I didn't tell you this 10 lakh is my extra kind of money I have right now, or this is what I need for my daily kind of expenses, my non-discretionary expenses. So somebody saying travel the world, I would be the one who would choose that. Buy something big, 6%. Pay for higher studies, very good. I mean, 15% of you want to pay for higher studies. And party hard and figure out later. I'm sure Mittal ji has done party hard and figure out later. So see, there are different way you kind of do that. Use the 10 lakh rupees depending on your own needs. Everybody has different desires, different goals, different kind of liabilities, and therefore you will make decisions depending on. And thank you so much, 52 votes participating, so that there is some kind of breaking the ice. Move next, please. Also, as Warren Buffett said, the best investment you can do is invest in yourself. So I think you are a very young crowd, keep focusing that the best investment you can do is invest in yourself. Everything else can wait. Before we actually get into that, in terms of talking about instruments, talking about all of that fancy stuff, why should one invest? What is the need? So simple need is you go to a, kind of a fruit shop, you buy 5 apples, it costs you 100 rupees today. Try to go to the same shop next year, or if you remember when you went last year, you won't be able to buy the same 5 apple, for that same 100 rupee, right? The apple would have kind of change in the price. He may ask you 105 now this time. So this extra 5, which is you have to get to buy the same 5 apple is your inflation, right? Which means 100 rupees today is not 100 rupees tomorrow, and therefore you need to invest. Otherwise, you won't be able to buy the 5 apples again. No, please move back. There's no rush. I have the slot. Yeah, go back, please, on the slides. Again, I think as we kind of done the poll, so we will have different goals in life. Education is somebody's 15%, travel, home, startup. Somebody wants to do start. I work for around now 16 years, 17 years so far in the industry. 2008 I have started working. I worked for 15 years, then left my full-time job, and then kind of started last year as a full-time startup. Maybe one, which is I think very late. I am doing it in 40s, so I think I'm double than all of your, the audience age, more than double maybe now. So maybe you want to do it in 20s. So maybe that is where you need to start investing to grow your capital. And to protect yourself and your dependents, you need to make sure that it's not just salary, which is one source of income you need to generate for yourself. It has to be other sources of income which will help you to protect your future. Of course, the quote you can read. Now, next question. Now, we all agree that why should one invest, if we have agreed, because of the reason that I can't buy the same 5 apple next year. Where I should invest are a couple of options. Since this club is, I think, Asia's largest stock advisory young graduate club, if I'm not wrong, that would mean that this club is very much aware. Can we move to the next slide, please? This club is very much aware about equity as an asset class. You want to talk about equity, derivatives, options, futures, great algorithm trading, fancy stuff. Of course, so you guys are expert there. But of course, you have seen your parents. None of the name mentioned here is kind of just a disclaimer because I run a regulated business with SEBI. So the names mentioned are just so they can relate to, company like Infosys, you name bank like HDFC Bank, right? Otherwise, fixed income instruments, your parent has done fixed deposits, which they use to then pay your fees, which earn some rate of interest. You can invest in equities, which means you participate in the growth of the companies, which you see around yourself. You use whatever you use in a daily day, kind of you eat some atta, Ashirwad atta, that company is ITC or whatever, right? So you know that whatever you consume, if you invest in those companies, you are participating in the growth of those companies because ultimately you are the consumer of those companies. So I usually tell everybody, when you have to start investing, don't go with some fancy names. Whatever you do from morning, when you start brushing your teeth to using a kind of whatever brush and toothpaste to, the pajamas you sleep, the entire day, whichever things you're consuming, just list down the companies. Every time you just look at back of the product, what is the company name, whether it is Dabur or Hindustan Unilever or whatever, right? And kind of or go to bank and invest in, put up money in your bank. That is where you have to put money. Of course, people now, real estate is a big thing. Delhi is a place to be, where real estate is one of the asset class. Tomorrow, I think, is Akshaya Tritiya, if I'm not wrong, right? And therefore, our senior professional just discussed, Sanjeev ji just said, सारी आपकी मम्मियों ने, आप लोगों ने, आपकी बड़ी सिस्टर्स ने गोल्ड खरीदा है, कल को फिर खरीदेंगे, जबकि इतना ऑलरेडी घर पे है. So that is where people do buy commodities as well. So these are the different product classes where one can invest once he decides to invest, and we know the reason why one should invest. Okay, next slide, please. Now, I think Sanjeev sir talked about some very good myth breaking here. He did kind of targeted those myths that people think. I think some audience asked, do we have to have a lot of money to invest? Why somebody's talking about investing right now? I don't have money. I only get 2,000 rupees, 1,000 rupees, 500 rupees, whatever, 5,000 rupees pocket money. How can I invest? I think that's the biggest myth. You can start a SIP even with 100 rupees now. I have a product in the ETF category on my own kind of portfolio where you can invest with 100 rupees. You can invest in equity markets, gold, silver, commodities, and a mix of ETF, which we will launch today with you, which is 100 rupees as a ticket size. And therefore, you can absolutely invest 100 rupees. Another thing which you have to, you are all kind of, commerce and economics, so you're smart chaps. You know how compounding works. You know that 1,000 rupees, when you start your college, say 1,000 rupees a month, 12,000 in 1 year, 36,000 in 3 years, that naturally will compound to 45,000 nearly, right? If you just let it grow with compounding of 13, 14%, right? That is where the magic of compounding comes. Let the money work for you when you sleep, they say, right? Most people, that is where, so I am 40 now, you are all 20s. Most people, of course, lose decades in realizing that they have to have the right salary to take some decisions, to buy whatever they have to do, to take a plunge. I don't think it is the right thing. Whenever you start early, that's the only mantra. Whenever you get 5,000 rupee, 2,000 rupee as a pocket money, or internship of 20,000, 30,000, 40,000, whatever internship you get, half of the money is the first point. Pay yourself first. Maybe that half which you are saving, maybe from 500 from school students, 250 rupees, it will help you buy some cookies for your boyfriend, girlfriend, or whatever, right? So that will help. Pay yourself first is the first step. I mean, the quote is, anyhow here, Albert Einstein said, and of course we know that it is the eighth wonder of the world. Okay, so you don't need big salary to start investing. You need a small habit to start. So please inculcate that habit is my request. Being your senior in terms of the work, 20 years, with you. Can you move to the next slide, please? Okay, now we have the actual quiz. The last time was icebreaker. This is the actual quiz where you have to participate, the top 10 winners. So there will be a series of questions. I think I'll play it twice during my another 15 minutes left. There will be a series of questions. And sorry, I'm to use my phone because I have to run it from my phone. So I'm just kind of starting that quiz now. I think participants are joining now. You can see, you will see, I see Arya, Vishwaraj, Ayush, Tulsi, Ashima, Sandeep, Karan, Vardraj, Sandeep, Hardik Gupta. So I have to call out, I'm just calling out names. Let please more of you join. I'll start the first question. We will kind of have few questions and then take a pause. They'll come back to the session, and again, this quiz will be continued again. And then the top 10 winners will contact me after the meeting, and we'll of course have some goodies for you. So a lot of people, great to see so many, Tanishk, Devansh, Ronit, Roshan. Okay, chalo, karte hain first question. So first question is on the screen. What is the full form of SIP? It's waiting for votes, it says. 31 votes, 39 votes, 43 so far, 47. And I'm sure you can see the answer yourself. So the answer is also now in front of you. And you know that with the answer 2%, only 2% of you so far know that it is single investment portfolio. But 98% of you know the right answer, which is absolutely fantastic. So you see the next question on your screen, which is, what does the P ratio measure? Profit versus expense, potential earnings, price to earnings, price expansion. Good, 49 votes so far. Seeing like smart audience. So answer is revealed, which is price to earning. 87% of you are right. 13% of you just have to kind of brush more skills. This is fine. This is a good number to kind of get here. Next question is on screen. In stock market, what does bull market mean? I think you're all smart. I think 100% will be right. Market is falling, rising, closed, confused. I think market is confused is the right answer as for me, but maybe you know best. Let's see what the answer is. I think 4 seconds now. So I'll do 2 more questions and then we'll come back to the session. So 95%, okay, there are still 2% people who think market is falling, and good that there are 4% people like me who thinks market is confused, which so I am with you. Rest 95 people like, no, I don't agree. Anyways, you know who will win at the end. Next question coming on the screen is multi-factor investing. Primarily aims to beat the market by chasing news, reduce risk and enhance returns systematically, only invest in tech companies, time the market perfectly. 40 votes so far, 5 seconds to go. इसके बाद एक और question करेंगे बस. Okay, so the answer is revealed, which is 93% people think the right answer, and timing the market perfect. There are 5% people here, around 10, 15 people here who would like to time the market perfectly, which is a good start when you are young, but when you realize that you can't time the market eventually, but it's a good start. Okay, last question before we move back. Very simple, what is a portfolio? Single stock, only mutual funds, insurance policy, or a mix of investments. This has to be right for all of you, is what I will expect. We can move to the next slide. The only message is start early. Right. I think this is soon closing. So now this quiz will be continued because I will not be able to, I don't have the kind of next option to have another round of quiz, another code. So I'll just pause it and we'll come back to the quiz. Okay, so finance is today bigger than ever. So you are, I think, very lucky to be born in whatever 2000s and maybe 20s now, because it is getting bigger than ever. I'm born 19, I'm an 80s kid. You are a 2000 kid, which is like generation gap of many generations. I don't know, you're called Alpha or still Gen Z, I don't know. But think about it that you are very lucky to be part of a place which is around 8.6 billion, right? The market, just fintech market. But if you think about, for example, what are the opportunities you can immediately have in terms of your internships, in terms of your first job, which is in fintech revolution. Startups are transforming how we invest, how we kind of lend capital, how we manage money. And because we're using a lot of tech, right? We are tech first. Investment research, we also are a SEBI-registered corporate research analyst firm. If you're at small case as a platform, I'm one of the small case fund manager. I, of course, started just another year ago because I was working with HSBC for a long time. I'll talk about myself a little later. So you can actually get jobs into core investment research. I have a lot of internships from, I'm from IT Kanpur, so I have the kind of lot of my kind of hires are from IT Kanpur. Your Hindu College did a wonderful internship with Golfi in their summer. They did a marvelous 2 projects they completed, which was very well accepted by us. So maybe something SRCC students should reach out and do some live projects with us if you wish to. Wealth management and private equity is another place where you can think of internships and job opportunities. Venture capital is coming big. Of course, we had our senior member here, which just took the first session, talked about kind of the space right now. So backing the next big thing, the next startup idea, kind of you joining those companies to be an analyst there and understand how the valuations are done and all of that space. New thing is coming in terms of climate tech, right? Crypto, ESG, fine, all of that. I'm sure you are studying as part of some of your courses. If not, please start reading about ESG, start learning about climate tech. The world is very complex. You have weather derivatives also, so carbon derivatives, weather derivatives. So things gets complicated. If you really want to go to that stage, but start with very simple thing, right? Smart with a very basic investment research kind of analyst profile. Understand how fundamental analysis is done. Understand how quant analysis is done. We run a quant-based model portfolio. So this is where you have great opportunity in the next 5, 10, 15, 20 years in front of you. Okay, next slide, please. Okay, this is me, just that, I couldn't find photos last night. Somebody asked me to put a slide. This is where I kind of, this is only for a photo I got clicked. I got it clicked this way. Like currently our setup on running on machines and doing, showcasing fancy stuff. But of course, my college days, my first job, I think, 2008, then my HSBC long career for 15 years of the HSBC itself. I was in London for a long time. We celebrated first Golfi anniversary also recently. So we are 1-year-old organization. By just like the first few members of the team, like with PhD in mathematics, also part of our team. And then of course the London Eye in the background, which is all to do with how you really kind of decide after working for 15, 16 years of corporate career that maybe this is the only life you have and therefore take a plunge. So if you want to take a plunge, you directly start from starting your startup, and very happy to guide in case you need any help. So that's about, very brief about just some pictures. Yeah, I think we are nearing the completion. Yeah, go next, please. Okay. Now we talked about what is the need to invest, right? That was the first question. Where you can invest, that was the second question. Then, of course, why this is the right time, why you are in the right space, lot of opportunities across different business lines. Now what you need to do to be industry ready. When we kind of take interns for internships, where we look for very basic skills, to be honest. Of course, it is now more of data-driven, tech-driven. Python has become a very basic minimum requirement in terms of data crunching. But if you think about mastering excellent financial modeling, so you need to be mastered in financial modeling, or say at least Excel analysis at best. Python is very important. When I say Python, it's more of any programming language, to be honest, which you can use to do that job much faster than which would take otherwise a lot of work in Excel macros and all of that. So try to be more on the, of course you are all, economics, commerce students, but try to do regression analysis, try to do a lot of statistics, right? So that would really help. I did my master's in quant finance, so that is a very complex subject, but kind of for you to graduate from a graduation to something quant finance master's degree, that's a kind of step you have to take by learning these skills, which are the base minimum. Then you need to understand at whatever age you are just in 12th class or you are in your kind of college years, you need to understand what are the ETF products in India, right? What are mutual funds, what are stocks? There are very limited ETFs in India, for example. No fund house, there are 43 AMCs in the country which have mutual funds, 43 fund houses in the country which have mutual funds. At the same time, there is no mutual fund house today in the country which has multi-factor ETF, which means they only rely on size as a factor. Bigger the company, larger the weightage it keeps in the basket. Nifty 50 would simply mean top 50 companies of the country by the size of the company. Whether the companies are getting impacted by like IndusInd Bank or whatever, but there is no other factor being used. But now in the world of multi-factor, you're not using size as a factor alone, you're using growth as a factor, you're using momentum as a factor, using value as a factor. So when you combine multiple factors, you realize that when people say high risk, high returns, and what Sir also kind of clarified some myth, how low risk does not mean low returns. So that is where the concept of multi-factor investing comes into, that how do you create a risk-adjusted portfolio, which will, for each unit of risk, it will take the alpha it would generate. So that's what you have to learn. Communication is very, very straightforward. You have to know that how to kind of simplify complex ideas into simple language. Industry wants solution finders, not just theory experts. So you need to be implementing the stuff you have learned. New skills, new tools, your personal branding. Make sure that all of you send me LinkedIn request so that, and if you don't have a LinkedIn profile, make one. And of course, time management and prioritization, which is the key skill. Next slide, please. This is the last of the kind of Slido, which will also decide the winner now. Again, the same. I'm now go back to your kind of Slido, and now you have another question coming. Please vote. If a company is popular, does it automatically mean it is a good investment? The 4 options are: no fundamental and valuations matter, only if the share price is low, yes, big names always perform better, yes, brand names guarantee returns. So 33 votes so far. Okay, only 2% think that big names always perform better. May not be the case always, but I understand the 2% of you. Is saving in a FD better than investing in equities for long term? So I think the answer is straightforward. Now with whatever we have discussed so far in the last 20-25 minutes, the answer should be kind of clear. But it says always safe and better. Equities historically outperform FDs over long term despite volatility. Depends only on inflation. FD give high returns. So I think the answer is 87% only right by you. 7% of you, I don't think the answer is right. So, and it's another 7%. So we'll see the winner at the end. Another 2 questions before we finish. Which commodity has seen the highest price jump in the first quarter of 2025? Crude oil, silver, gold, coffee. Yeah, you have to answer here, sir, in the Slido. So 3 seconds, 2, 1. Gold has seen the 84% people of you were right. When FYIs sell heavily in Indian markets, what usually happens? Stock market fall, rupee strengthen, stock market rally, no impact on stocks. I wish no impact on stocks, but we are not yet there in form of a country that there is no impact, but we will eventually get there, I am sure. So the question is when they sell heavily in market, right? It's not a usual sell, it's a heavy sell. And so revealing answer. And the last question, which before we kind of finish this kind of quiz, and we have the winners. In fundamental analysis, which financial statement is primarily used to assess a company's profitability? Balance sheet, cash flow statement, shareholder equity report, or income statement? Six seconds to go, guys. 84%, 9%, 4%, 4%. Jaldi kariye. Okay, the time is over. Answer was income statement, which is right. So we have Arnav, not the last name, Sagar Gupta, Harshit, J. Khemka, Anubhav Sood, Vardhraj, Aditya, Ayush, Devansh and Yash to come after the session and collect your goodies, please. So a round of applause to the 10 winners I just kind of mentioned. Please, next slide, please. Okay, so we talked about all of it. This is just the final slide of mine, which is something we curated just for you for this launch, for this day, where we have kind of made it live last night. A product which is available on our kind of website. It is a basket of ETF, which has large cap ETF, Nifty 100. I mean the large cap 100 companies, gold, silver, etc., debt, etc. The minimum investment size is 102 rupees because of the complexity, 101 or something like that. The whole idea is start small, grow steady. This is your first step in investing. And it's a simple ETF, super low ticket size, 100 rupees to 500 rupees. If you can order a pizza, you should think about investing in this ETF. Okay, I think we are, and as I said, someday is not just a day on the, is not a day on the calendar, which means do it today. I mean, if you wish to. But yeah, this is just to kind of, I wanted to do it in front of you so that you think, you should know that even if you have 100 rupees, 200 rupees, and you want to participate in the growth of our country by investing in the companies of the top 100 companies of this country, by investing in, say, gold growth, or I mean the mix of these assets, ETF is the way to go. There are unfortunately very less ETF in our country, and I think all of us, even us, when we move to a fund house, when we become a fund house, ultimately will have to launch new products which are passive in nature, track markets, and return generate alpha for you. Okay, I think the last slide. Okay, so champions are not born, they are built. Of course, it's a known thing, and I personally believe this is to be true. One practice session you do, so one match, one decision, change the game. For wealth and success, one learning curve. Learn something new every day, every month, be it Python, be it macroeconomics, be it regression analysis, one investment, one saving habit. So don't wait to be perfect to start, right? Start and you'll become perfect along the way. Thank you, SRCC. It was an honor sharing time with you. Next slide, which is my kind of title and my email address, my phone number. And let's stay connected. Hope it was useful. The winners, please do come and collect your prizes. Thank you so much, guys. I hope you, it was not too boring, I hope. So thank you so much. Take care.
Thank you so much, Mr. Arya, for sharing your valuable insights. Now, as a small token of our appreciation, we would like to present to you with a memento. A big round of applause for Mr. Arya.
How is the Josh? Good. मैंने क्वेश्चन ही लिया, मैं एक दो क्वेश्चन भी ले सकता हूँ वैसे आफ्टर दिस. Anybody has any 1-2 questions I can of course take. किसी पे कोई क्वेश्चन है? Was it very complex? You have the guy. Okay, please.
So my question is regarding, as the gold has surged like so high in the last 1 year, it has outperformed all the major indexes across the world. So how do you think the gold rally is going to look forward? And does it make sense for a retail investor? Let's say he has around 3 crores of AUM. Does it make sense to build a multi-asset portfolio and maybe allocate, let's say, 5-10% of his portfolio to gold? So does it make sense at this?
So the question is around gold allocation to your portfolio. And is it a good instrument with it being at the top at the right at this juncture? So what I believe is multi-asset baskets would always give you risk-adjusted returns, right? It is always the case because you have kind of used gold as a hedge, or gold sometimes kind of. So in history, if you see history, right, gold was always negatively correlated. Equity market are going up, gold is going down. Equity market are going up, down, gold is going up. Last 3, 4, 5 years, we have seen that gold and equity both go in parallel. There is not kind of mathematical correlation coming out. However, if you look at the gold of growth, it always happens in spurts. If you really see last 25 years or 20 years or 15 years, the CAGR is still the same. Gold is growing at the same CAGR of 9-10% as it has been historically growing. Of course, for people who invested very late in the cycle, they may see gold is outperforming the equity markets. So all the market data you see in India, whether it is 25, 30 years of data, or you see in the Western world, equities will always outperform the global market. Now, depending on, say, your risk profile, depending on your portfolio kind of management of your money, when it's a 3 crore AUM, I personally believe gold should be a part of the portfolio. I mean, that's my personal choice. Again, depend on people say 100 minus A should be your equity portion, right? People say that if you are 20 today, you can be 80% in equity. People then change that rule later. They say rule of 120 minus your age. So even if you're 30, don't do 70% equity. Do 120 minus 30. It means you can be very aggressive with equity because you have age at your side, right? Gold should be, so the answer to your question is gold should always be used as a hedge measure, but it should not be used as an investment class from a perspective or a return perspective. It will always kind of protect your downside. That is what my kind of summation for your question is. Yeah?
Thanks.
Any other question? Any question from a young, when I say young, school student, going student who has never seen any ETF, who has never seen any, who do not have the Demat account? ये सब करना क्यों है, सब सुनना क्यों है? Anybody on those lines? आपका कोई question? एक तो पूछना है. Sorry if I'm delaying the session, but I think I finished within time. मित्तल जी बोर हो रहे हैं. So I'll come to you after the session. So we use screener day in, day out. We're just kind of your premium user.
So you created Goalfi. So throughout the journey, what was the biggest challenge you had by creating this, and how did you deal with that?
See, usually startups are born, what I personally believe, as I said, I started working in 2008, right? I was working as my first job when markets were, of course you were not born, or maybe you were just born that time, when there was a global recession and sub-mortgage prime lending, all that issue, right? You kind of just 2, 3, 4 years just go by in stabilizing your job. You're actually not sure what you want to do. You just kind of get into and then see, maybe I like it, maybe I do not like it, I have to save my job. 3, 4 years later, you realize that maybe it's something that I would like to do. This is something I would like to do. And then you start taking some decisions, which is, for me, I kind of, that time got into a stable job at HSBC. Then I kind of changed every 3 years within the bank. When I worked there for 15 years, my job was to move across different service lines, whether it is risk, compliance, finance, kind of analytics, model building, so that I understand how a financial ecosystem work. Goalfi is more of, of course I have my own personal story from where I come from, that I had to take a break from my school because of no fees and all that, where I always feel that, these tools, people should have access to personal finance tools. That's the need of the hour, because we should all know where the money is going and how do you manage your kind of finances. I come from a background, of course I live in Hyderabad for 20 years now, because I've been working for that long, but I belong to a city called Rampur, which is very near to Delhi, right? I had to take a break from my school because my father couldn't pay the fees of English medium school, and all of that happened in the past. Then of course I moved on, I did my master's degree in quant finance, I have IT Kanpur alumni, I did some executive program at IIM Calcutta. So all fancy thing, I worked in London headquarter at HSBC, all of that I did. Goalfi was a result of you realizing that you have been working in the industry for 15, 16 years, back to back, across service lines, across regions. Is it just one life? And you always had the need of having control on the money in terms of, growing money, in terms of meeting those small goals, whether it is you want to do now every alternate year vacation, that is a travel goal. So Goalfi was more of a result of all of that, how to democratize, investing to a retail audience at as low as 100 rupees, for example, which maybe earlier was a prominent wealth industry where you only have HNIs, kind of, you need 50 lakh for a PMS or 1 crore for a AIF, and then you get the HNI kind of services. So Goalfi was more of that need. We started from a RIA license, we now moved to a RA license, we're now going to PMS, and that's different stuff. But Goalfi was more of my personal journey of what money challenges I had, I think, and where I think, it would help others start small, but ultimately grow a lot of wealth. I think that was my reason.
Thank you, sir.
Yeah. So I think time is up. Thank you so much for everyone, and thank you so much for the gesture. Have a wonderful day.